Welcome to Soarin with Soarin, a video series describing different topics in your industry to help your business grow. Welcome, Soarin.
Thank you.
Thank you for being here. You are the mortgage tech guru, from what I hear.
I've heard that too, but
Yeah.
I'm not so sure.
Well, the first topic we want to speak about is outsourcing. And I know that that's one of the core business principles of your company. So when we speak about outsourcing, what does that mean?
Well, outsourcing is essentially getting some work that you have in-house and finding external capabilities for that. And there might be many driving factors to outsource, but primarily it is driven by an immediate need where some business problem is not being solved. And so you're looking at external partners, which is called in the industry as vendors, to take care of that need.
And do you do most of it offshore, onshore, or can you do a little bit of both?
Yeah, the location where you do outsourcing is dependent on a number of factors. Obviously, we are in a globalized world of the internet, and you can pretty much, any kind of work that doesn't need physical presence can be done anywhere in the world. So the choice of location is based on a number of factors, which we can delve into later, but primarily if the capability exists anywhere in the world, we're talking of now the talent pool of the world and not just of your neighborhood or your city or your town. And if you can bring in a culture of looking at global talent, then the world is your oyster, and you should really look wherever the best people are and wherever the best skill sets are available. And there are other layered factors like cost and capability and stuff like that, but primarily it is dependent on where the work can get done, and you're going to get high quality service.
And I'm of the understanding that you guys were the pioneers in the business process outsourcing space.
In the mortgage industry, yes. We were one of the first companies. One of our predecessor companies that we started was in early 2000 when outsourcing was just starting off. There was technology outsourcing was very popular, but not business process outsourcing as we know it, which is work done for the service industry. And specifically for the mortgage banking field, we were one of the first one or two companies to start this. So a lot of depth in the industry. All of our executives have been doing this for a while, and we work seamlessly with our partners globally to deliver these services out of their global locations.
How should a business prepare for outsourcing?
First of all, if you do not have very defined processes in-house, it's hard to outsource anything. So outsourcing is a part of the process maturity of a company that has to happen. Many times when, especially when business is at a height and there's a lot of pressure to operate, businesses create many in-house processes, in-house systems that are all convoluted and layered on each other and pretty much dependent on what we call genius-based businesses. So Mary is good at underwriting, Sue's good at accounting, and the company becomes dependent on people rather than processes. So the first step to any outsourcing process is to look internally and say, hey, can I unravel this from the people to individual processes? Ultimately, it might be people or computer systems operating on those, but can we specify what those steps are? So that might require a lot of workflow analysis, a lot of looking at systems and the ability to use those systems in a remote location and things like that. So once this exercise is completed, then you can really look at others doing that work for you.
So basically you prep them before they even get to the outsourcing. In other words, you help them implement systems prior to just them giving you the outsourcing business, because they have to be prepared.
Absolutely. The process maturity has to be there. Now, we do have an insourcing model where if all you need is a certain number of people to augment your floor, we could actually augment your floor and bring in people. This is a staffing model, or we have a model where it is managed staffing, where the first model is we just give you the staff and they work seamlessly as if you're hiring new employees, but it's a variable model. The other could be managed staffing, where we manage the staff. And then
so it's a very boutique approach in the sense that you tailor it depending on the needs of the client.
Right. The outsourcing would be at the final step of it. So after managed staffing, when we manage process, where we are still on your floor, but the processes are as it would be on the floor. And then finally, once through these steps, or you could just take the model of just analyzing the workflow and jumping to outsourcing. So we can fit in any step of this process as required, and we really work with our clients to see which stage of process maturity are they in, and work with them to either help them achieve their process maturity, build systems that are required to do outsourcing, and take them there. So
you take them there. You help them soar, right?
Kind of, yeah. You
Okay.
could say that. Absolutely.
What other challenges do you see when they're preparing their business for outsourcing? Is there language barriers or background checks, insurance, things like that?
First of all, it's a concept that has to be sold by executive management to the floor, because companies usually become very territorial about their processes, and when it's people-based businesses. So first of all, it has to be sold from the executive level all the way down to the individual processor. Once that is done, then it's a question of connecting people at each step of the process, not just two CEOs deciding that, hey, we're going to outsource, but each step of the process, all the people have to communicate with each other and really get to know each other as partners rather than adversaries. Because one thing that we have learned in 20 years of outsourcing is if you view your outsourcer as an adversarial opponent that you're trying to prove a point against, it never really works. It might work in the short term, but long-term relationships cannot be formed.
That makes sense. More like a mortgage technology partner, which is how you're positioning yourself to be.
Absolutely. Technology is the central core of any kind of outsourcing today for service businesses, starting from a very strong bandwidth and internet connection that can maintain connectivity at all times and the communication, but all the way through taking your systems that are in-house and now having them in a distributed model in a global setting or even in a local setting, and also really creating some workflow management and other systems where you can manage your vendor very seamlessly. So all the metrics are visible to you on a real-time basis, so you're not left in a void. Because one of the things you can have when you have work being done locally is you can actually watch over somebody's shoulder or just generate a report on the fly from your database. But if this is being done remotely, then those numbers and those metrics are essential almost and not an afterthought, and they have to be thought through as part of the engagement. So expectations that were set in your contract and the SLAs that were set are being executed at every level.
How long is the typical process from the moment the client engages with you and you set them up, prep them for outsource, and then the trickle down from executive management to the floor and the business starts? How long does that take from start to close?
That's a great question. It depends upon somewhat the complexity of what is being done and whether it's, again, that the process definition is there or not. So if somewhat subjective, then it might take longer because getting the other team up and running would be a little bit more difficult. So let's take an example of, say, underwriting. If you have a very clear process, policy and process manual, if you have your underwriting guidelines well thought out, written out, if you have an underwriting system where all the steps and the workflow steps are clearly documented, all the tracking is there. If the handovers at various stages of the process, who takes over after the initial file has been assembled to the final decisioning, if that is all taken care of, then it's relatively simpler, could be a couple of weeks to a month or so. And most of the challenges there are really systematic, especially if you have trained workers at both sides. Now, if you're working with somewhat of more of a transaction processing model, for example, keying from lien releases or title data entry and stuff like that, or public record search, these can start immediately because we have team members who have already done this many times. We have expertise across the cycle of mortgage banking, but depending upon the complexity of the process, each bank or mortgage company that we work with might have different ways of doing the same thing, different systems to do the same thing. So we just have to really understand what is this current mix. We need to have the teams gel for a little bit, and then we have a process called transitioning where we slowly, gradually ramp up, initially focusing on quality and then ramping up to getting the productivity standards that are required.
How about scaling up? Is that something that you guys can do pretty quickly, or is that going to take a longer time if somebody gathers new business and they need a partner that can scale up rapidly? Could you ramp up quickly with the resources you have in-house?
Absolutely. Scaling up with humans, if new recruits are being brought in, there is a process. And you don't want to rush that because again, it's a balance between quality, productivity, and timeliness, the three kind of angles that you have to look at. But typically, once you have a good process definition and once you have an initially trained team, now we have a foundation on which we can quickly build on it. So these initial team members now become the mentors for the folks that are coming after. So we have a lot of work that we do where there's floor training, where these initial folks that have been trained would go out on the floor and then essentially bring the other new recruits up the curve. They all have that mortgage banking training and experience on the base level, but the specifics with respect to this particular process or this particular client has to be brought in. And the other thing that we do is we are very particular about having dedicated resources for every client, so we don't switch them around. And so they really become an extension of the client. So somewhat, the question is somewhat similar to how quickly could I ramp up in-house, and we try to mirror that. It's similar to hiring your own employees, bringing them in, giving them the requisite training, and embedding them into the process. So, but in most cases, it's less than a couple of weeks. If it's a massive ramp up, there might be a hiring timeline based on what is needed, but we understand that the mortgage industry is cyclical, especially in the origination side of the business. So we kind of move with the clients, and we are mortgage bankers essentially, and we understand that. And we use various models. It could be bringing on in full-time employees, maybe contracting employees if the client accepts that, bringing on a variable workforce from other processes by training them on multiple fields. So there are many techniques in the industry that we use to achieve ramp up quickly and efficiently.
You mentioned mortgage banking. You were in mortgage banking prior to launching this company, Nexval?
Yeah, I've been 25 years in mortgage banking now. I'm a certified mortgage banker. And this is the field that me and all of my colleagues in this company, we kind of have only been in. And so we are really financial experts and experts in the mortgage industry and real estate finance in general. And technology is our other forte. So I started off in mortgage technology, working for various mortgage companies and investment firms. Did some stints in executive consulting and high-level strategic consulting for mortgage banks. And then we started, we kind of saw some of the inherent challenges in the industry of having people who are trying to outsource coming from other industries where they don't have the experience to understand some of the nuances of the
intricacies of that world.
Right.
So essentially, you're mortgage bankers providing a service for mortgage bankers.
Absolutely, yes. That's kind of one of our themes is we are mortgage bankers, whether we are in Bangalore, in Kolkata, in Dallas, in Miami. We are all U.S. mortgage bankers. Many of our employees have been with us for over 20 years. That's all they've worked in. So they're no different sitting in Calcutta as they would be in Miami. And it's very seamless to our end customers.
So what are some of the critical factors when companies are considering outsourcing?
Well, first of all, the company should know, are they ready to outsource completely? Should they try an in-source or some sort of hybrid outsourcing model? And if the process maturity that we talked on a different talk is there. If that is the case and they're ready to outsource, then roughly we break it into 5 buckets. And we call it the 5 C's of outsourcing, a term that we came up with. The very first one is C for cost. So one of the biggest considerations to outsource is, will it cost me more or less or equal than what I'm spending in-house? Typically, if it's an outsourcing model where you're using local vendors and not going offshore, your cost will be probably equal or a little bit higher because your chosen outsourcer has a margin built in to what they're operating at, when their costs are about similar to what you have in-house. So, but if cost is really a factor and the driving force behind the outsourcing process is a reduction in cost, then obviously you have to look at cost effective models such as offshoring or automation, which we also consider as an essential element as part of the outsourcing process. The second one would be capacity. So, are you challenged by capacity challenges right now? Do you have a huge project coming up, or do you see a change in industry cycles? Do you see a growth in your business where you're going to need a lot more people and a lot more resources coming up? So, to counter that capacity challenge, then you have to decide whether you want to hire them as employees, as contractors. Are you going to do an outsourcing model? What we recommend to our customers is to do all of them and keep a certain amount of outsourcing capability so that the external vendor can also grow the business along with the actual client. And so capacity considerations are important to map out and decide how much of resources do I need, over what time period, and how to make that happen. The third one would be capability. So is the capability that I'm trying to outsource, is that available first of all? Is that something so unique that is an IP for my company that I want to keep in-house or I'm unable to share with external partners? In that case, of course, outsourcing will not work. But if that capability is something that exists externally, is common in the industry or expected to be known by your vendor partners, then that makes a good model for outsourcing. Or if it's something that can be trained, it might have some internal things that the company has done that can be trained to the external vendor, then it can be outsourced. So the capability is definitely one of those factors. The fourth one is C for criticality. So how critical are these processes? So it used to be that when outsourcing, companies would consider sending out the least critical processes, such as transaction-oriented processes, and anything that needed analytical skill sets were kept in-house. But that has, with the maturity of the industry, for example, in mortgage banking, where we operate, it used to be very simple tasks like data entry and getting online searches done. But now, with the maturity of the industry of the 20 plus years that we've been doing this work, now all of the workers across the outsourcing spectrum have gone up that knowledge cycle where more critical tasks that are somewhat subjective, not so objective, what is called core to the industry. There's a term core versus non-core. So that line has somewhat grayed on what is core and what is non-core. So essentially, if that knowledge exists externally, if the vendor is able to perform at the very high levels required by your contract, then criticality is increasingly something that is subjective to be determined based on your vendor partner. And the final one is compliance. And this is a big one because we work and operate in the financial and banking industries where compliance is at the central core of everything that is done. So compliance across many areas. Compliance in terms of the regulations that we have to know and perform under. We have various regulators in the industry, CFPB, we have our GAC regulators, Fannie Mae, Freddie Mac, etc. We have banking regulators. So all these regulations, is the vendor that you choose, or are they will be able to comply to all of these exacting requirements? There are also IT compliance issues in terms of data security. We are talking of private confidential data from our borrowers, etc. Will these be complied to by the vendor? And do they have the infrastructure and the people and the process and the compliance paraphernalia and the people in place to keep to this high standard? So roughly within those 5 parameters, if you can look deeply and say there's a fit, then and only then an outsourcing project should be taken to fruition. And if any of those areas are found to be lacking, then first that has to be fixed, or an appropriate partner found that has already solved for that, or it needs to be a joint process between the vendor and the client to sort out those challenges before you outsource.
So let's expand on the topic of capability, one of these 5 C's that you mentioned. What does that encompass when it comes to operations, licenses, facility security, training, those types of features?
Correct. So the chosen partner, outsourcing partner, needs to have all of the capabilities that you would expect doing that work in-house. So you mentioned a few. For example, do they have enough space to put all the people? And if there's a requirement for growth, do they have the ability to grow quickly rather than having to, go out and look for new floor space? So are they operating at full capacity and will not have the ability to grow quickly, or will they? So that's the space aspect. On the licensing aspect, yes, all of the licenses that are required by the industry. We're in a highly compliant industry of mortgage banking and banking in general. So do they have all of these licenses required to operate, such as the BSA, the AML, the SOC, and other security certificates? It could be either in the operations side or on the IT side of things. And have they been certified by third-party vendors and third-party regulators that both parties can trust? In terms of the security, yes, we do need secure facilities. There are many multi-layered levels of security needed in an industry, starting with physical security, followed by security of scanning the folks that are working on these projects to make sure that they have right background checks done, etc. Physical security will also entail digital devices and bringing that into the facility. There could be also data security and IT security issues in terms of highly sensitive data that we're dealing with, that it does not go out of the network, it is not hacked, there is no issues with loss of data, loss of information either through means of computer networks or an errant employee taking that data outside and using it for profit. So all of these are considerations, and the outsourcing vendor has to be set up with all of these standards to mirror and match, possibly at a higher level than what even the client has in-house.
Awards. In 2019 and 2020, Nexval received an award for the top 100 great people managers in association with Forbes India.
We're super proud about that. I mean, we are a people-focused company. We have technology and we have a lot of automation, but the people we have are the central core of our business. And we have received this award repeated times, as you said. We're very proud of that, both for the managers. We also have an award on being one of the best workplaces to work in. And some of the work that we do could be repetitive and could really tax folks, and they have deadlines to meet, etc. So to keep that work ethic going, to make it a friendly atmosphere, to make it a good place to work, a fun place to work, is important for not just the people themselves, but for our clients who want to have that and who want to see that the folks that are working on their project are working at top capacity and are not getting burnt out. So we take that very, very seriously, and it's part of the corporate policy to ensure a great place to work and bring in managers from our core, which is what the People Manager Award comes from, that can then be the next generation of talent that can lead the floor.
Excellent. Thank you so much, Soarin. We really appreciate your time and giving us all your valuable insight in the industry. And we recognize why you're now the mortgage technology guru. That concludes series 1 of Soarin with Soarin. Stay tuned.